Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, insurance is the most important element in risk cover which secures you and your family from unforeseen events. But a denial from your insurer to settle the claim can be a big jolt. Over the course of our show, we have been receiving a lot of questions from consumers about their claims being either rejected or problems that they are encountering from their insurers. To help us understand the process of settlement of claims, we have with us Yashish Daya, CEO of Policy Bazaar, also its founder. Yashish, welcome to the show. Of course, it's a very broad question. Why are claims denied by insurers? Can you give us a perspective? And of course, every insurance is different, so the claim is different.
Yeah. So you're spot on. Every insurance is different, and every claim is different. However, a claims denial will come under a couple of areas. The first one could be wrong information that one had provided. So somebody had said they didn't have a particular disease, but they actually had a disease. Somebody had said that their family did not have a history of certain diseases, but they actually did. Somebody said they were not a smoker, but they actually are a smoker. Somebody said they're not a smoker, but they actually are a smoker, etc. That's a whole category of what you would call misdeclarations, right? Under the second category would be a pure and simple misunderstanding. So a misunderstanding would be the consumer who bought the policy did not understand what all is covered and what all is not covered, or what the restrictions of the policy are.
So you're talking about that fine line that exists.
It's a fine line, but quite honestly, people like us make it quite transparent, and one can see it for almost every policy, but the consumer may still choose to buy without looking at it. So yes, it is a fine line, but it is quite transparently highlighted by certain players who kind of make things transparent. So, but a consumer needs to understand. Let me give us examples of that, which would kind of seem hilarious from a consumer perspective. So, if you are driving a vehicle and there's a waterlog, which happens quite often in National Capital Region, if any of us have driven around in the monsoons, and your vehicle stops, it stalls. If you attempt to restart it and your engine seizes, that's your problem. The insurance company will most likely not cover it. Now, that obviously from a consumer standpoint sounds odd, but that is an insurance rule. Now, there are certain policies that cover it. They are called engine protector policies, and they will cover it. And when a consumer goes through that claim process, a consumer says, hey, he suddenly cries foul that I didn't know this was not covered. But that is, if you have a car and one goes for a claim, you don't get the entire claim. There are certain depreciation that is counted, and there is certain salvage value that is counted. So you only get part of the claim, and the rest of it needs to be paid by the consumer. So there are what you would call a category of misunderstanding of the policy. Third could be, and this I'm assuming most of our viewers would not fall in this category, element of fraud. So a person is claiming or misstatement. So a person is claiming they have a particular disease and they're in hospital, but actually they're roaming around in college, or they are somewhere else. So they're just creating false bills to try and get it from the company. The company has every right to reject such claims, and that is why they try to check those things, right? A fourth category in it would be some form of overstatement of claim, which is essentially the same thing as the third one. But these are the broad ranges under which they would fall. Now, there are certain superfluous ones also, which I think the insurance companies should not use. These are things like delay in reporting.
Right. So lapsed policies is
another major reason. So lapsed policies will not be a claims rejection. Lapsed policies, you won't be able to make a claim at all because you don't have a policy. So your health policy lapsed 5 days ago. You're in hospital today. Don't have a policy, so you will not get covered. That is a pretty obvious one. But you will have the lapsed policy element.
So what you're talking about is the reporting part.
You go to hospital.
That you go to hospital and you don't report it to the
within 24 hours or 48 hours. So you are admitted to hospital, but you've not informed the third party administrator. Now, why are insurance companies keen on having this reported early? Insurance companies do get in touch with the hospitals and do try to stay connected and try to understand what disease you're having, and their big fear is hospitals overcharging or overtreating.
Right.
So recommending all kinds of procedures which are not necessary. So insurance companies have doctors on their panels which interact. And that is why it's important that insurance companies get it in a timely manner. If you report to 1 week later, the insurance company can do very little about the investigation, and that's why they get a bit upset. But it's for most consumers, that is something which they would find, hey, so what if I didn't report it? I have the policy, so why don't you cover me? So there is a bit of misunderstanding there as well.
Right. So two other aspects which are important. One is nomination details, incorrect nomination details. But why should that deny a claim? And second is, when you're talking about health insurance, pre-existing diseases or the misunderstanding as far as what constitutes a pre-existing disease. Because that's another area which I've seen which creates a lot of confusion amongst consumers.
Yeah. So most consumers end up at the hospital and then they realize this is part of a pre-existing disease and it's a disease that the consumers already had 1 year ago, 2 years ago, or it's part of the pre-existing disease plethora, and it won't be covered. So people need to understand what are the temporary and permanent exclusions. See, most of the time the insurance company is being quite logical. So they're saying if you've had a heart disease, then probably the heart diseases are not covered for a period of time, and which is just being fairly logical.
Either a moratorium
of 2 years or 4 years, or sometimes a permanent moratorium if it's a serious enough disease where the insurance company is trying to protect itself financially as well. Now, sometimes consumers try to walk around it, and most likely they will get caught because the insurance companies have thought it through. The insurance companies have had, so one must realize that the first consumer the insurance companies dealt with. So insurance companies dealt with this in the past as well. So try avoiding those. Go with the fine print the way it is written.
So now a consumer's claim has been rejected. Yeah. What are the options? Where can he or she go? So
if it is rejected on some technical ground, which the consumer is not very familiar with, they should usually get somebody called an adjudicator, somebody who looks at this. So they are adjudicators. They look at this and they give their assessors or adjudicators, they give their assessment, and the insurance company sometimes considers that as being a valid assessment. In case they're still not happy, then there's the ombudsman, there is the IRDA, and eventually there are the courts of the land where you can go to kind of get justice. There are cases where consumers have gone to the High Court, consumers have gone to the Supreme Court to get justice from insurance companies. There's currently a case with SBI Life where a customer has gone to the High Court and now that plea has gone to the Supreme Court. So those options do exist. They are long drawn, but if you have been wrong, then of course you have that option.
So are there examples or circumstances where the insurer cannot reject a claim?
See, the great thing is with the new amendment bill, which both the political parties are kind of fighting on and not kind of letting it go through somehow, there is a clause which says once 3 years have passed on a life insurance policy, the insurance company will have to pay the claim, even if there was a misdeclaration. Now, that is pretty serious. So the insurance company has 3 years to do whatever investigation it wishes to, but once 3 years are over, it has to pay the claim. The whole process of investigating a claim, whether it was a fraud claim, whether it was a genuine claim, in case of death at least, would not exist once this comes through, which also means all products beyond 3 years are exactly the same. If there is a death,
so the logic is that the company is benefiting financially.
No, the logic is that you've had 3 years. If somebody has misdeclared something, one cannot predict death more than 3 years away.
Right.
It's difficult, right? So if somebody is given some misdeclaration and the company has had 3 years to investigate, so if they want to do any due diligence, they can do it now, not use any reason to reject a claim post 3 years being over.
Right.
So that piece is being firmed up in the new amendment, and that should really help consumers against any such situation.
What about claim settlement ratios? Because a lot of people say the claim settlement of such and such company is really good. Maybe I should buy from them. Is that a good way to make sure that your claims don't get rejected?
See, it's a tough one, and I'll explain why. There are only 5 companies in the 2012-13 claim settlement ratios who had a claim settlement of more than 90% and had been around for a while as well. So the remaining companies who have been around for a while had not hit a 90% claim settlement ratio, which is a worry. However, as I said, first 2 years, first 3 years, one cannot really predict death beyond 2 years, 3 years. So the fraud claims that usually come in the first 2 years, and they are heavily investigated. So if somebody pays one premium and expires, it's going to get investigated. If somebody's been paying premium for 3-4 years and there is, the unfortunate event happens, there isn't really a need to investigate so much. So as age of a policy goes further, beyond 2 years, the claims rejection, nobody has a claims rejection greater than 10%. And those will be for very specific reasons. So I think the older companies have an advantage when you report claim settlement. and the younger companies are at a disadvantage. If you're a company that's 2 years old, chances are your claim settlement will be far worse than 90%. But I think if one takes that logic into account, besides fraud, if you are giving the right declaration, right information, you should have the right claim. However, certain companies do follow malpractices where they will try and negotiate the claim settlement. So say, okay, you have a 1 crore insurance policy, can we settle at 50 lakhs? I think that's a wrong practice. Companies should pay the claim in full rather than negotiating with customers who at that point are no, they don't have the wherewithal to, they don't have the wherewithal to get lawyers involved, etc., etc. Many of them will accept, but that is being aggressive, and certain companies do follow that practice quite aggressively. So one can, over time, if you hear that, I won't be able to say which companies, but I'm sure if people pick up that knowledge in the market, they should avoid those companies, very simply.
Right. So what is the right way to file claims for a settlement, a claim settlement?
See, every policy has a certain mechanism. So if it is a car insurance policy, there will be, if your car has got lost, there will be an FIR of the 90 days have to be provided. If somebody has gone missing, there is a missing report, after which one has to wait for 7 years before the person is considered dead. If there is a death, then the death certificate is required, the reason for death is required. If it is a health issue, the person is admitted to hospital within 24 hours, you've informed the TPA, so the TPA has got involved, so every policy has a different process. That process needs to be followed. If you are stuck at any stage, there are people who can provide some guidance on it. People like us also, you could just reach out to them and say, hey, what do I do? Which forms do I have? So they will on their website.
Documentation is key, because that's where a lot of us, we miss out on.
Yeah, at least which forms need to be filled, etc. You can find all of these online. So, the world is moving online. You pay your own electricity bills, you pay your own, most people file their tax returns. So, this is also one thing that people should start doing on their own. And, filing of your insurance claim, you have certain forms which you need to fill in and proceed.
She's 28 years old and with an income of 30,000 rupees per month, and is a teacher. And she's bought an LIC Jeevan Anand at a premium of 4,044 rupees a month. And the sum assured is 10 lakhs. Term is 21 years. She also has a home loan with an EMI of 10,000. And she wants to close the policy in 2 years, and says that I can't afford to continue paying the premium amount. Yashish, what's your advice on that one?
I see a lot of customers these are one of the most popular plans out there. And I know somebody somewhere is going to hate this. But let's just do a bit of maths. This policy was 4,044 rupees every month for 21 years. 21 years is 252 months. Let's multiply 252 with 4,044. You will get an amount slightly more than 10 lakh rupees. Your sum assured is 10 lakhs, which means at the end of 20 years, you'll get back 10 lakh rupees, or at the end of 21 years. So you will pay every year for 21 years and basically just about get your own money back. Why would you have wanted to do that? Now I come to the second problem, the worst problem. If you want to cancel this policy, you're going to lose money, because surrender charges in these policies are quite high. So unfortunately, I don't have much advice here, because you're already in a bad position, in the sense, if you keep investing, you'll get your money back. If you don't keep investing, you're going to most likely lose your money, or lose a significant part of the money that you've invested so far. All I can advise is continue the policy now. Now that you've gotten to this stage, please continue the policy. If you really can't afford it, convert it into a paid up policy, so that if you've paid for 5 years and it's a 20-year policy, you will get 25% of the benefits. But that's the best I can advise right now. But, think why, I can feel the pain right now, because you've got 30,000 rupees income, of which 4,000 rupees you're putting into this, which is not giving you any returns. You might as well have put it in your bank. You would have got decent returns. You would have got 8-9% returns. It would have been much better. Your money would have doubled or maybe quadrupled in the 20 years.
Right, we've got Nancy, who's 30 years old with an annual income of 4 lakhs, and she says, I have an 11-month daughter. Which LIC policy should I buy for her future or her studies?
So you've got Komal Jeevan is a good plan. I would suggest look at other plans from private companies also. But for child plans, I think child plan insurance makes a lot of sense, because see, in a child plan, the best part you have is the coverage is that in whatever happens, whatever unfortunate event happens, the child will receive that money at the end of that term. So I think Komal Jeevan is a good plan that you can go with. It does have various features of a standard child plan.
Right, Yashish, we've got Mr. Joshi from Ahmedabad writing to us. He's 65 years old, and he says he's got two sons in their 30s, and they have a group cover from a company, but that company doesn't provide a dental cover. Now, is there any insurance policy where a dental treatment cover is available?
No, unfortunately, you wouldn't be able to get a dental cover under any insurance policy. See, dental, cosmetic surgery, all of these are considered voluntary surgeries. I know in certain cases it's not voluntary, but they are considered that way, and hence their costs are not covered under insurance. What you can do is take up certain plans which are more like wellness plans. So what these plans are able to get you is a deep discount. So they may be able to get you 20-30% discount on any treatment. But no insurance policy that I am aware of, and I'm aware of quite a few, covers dental treatment or cosmetic surgery.
Right, Yashish, we've got Rahul Kadian from Delhi, and he says, I'm 27 years old and my annual package is 6 lakhs. I have 2 policies of LIC Jeevan Saral, and he spends 92,000 rupees yearly on that. And he's also planning to take a term cover and a medical insurance cover. And he says, I want to cover myself at least till 70 years old. And of course, he's talking about a good settlement ratio. So he wants advice on that. And he's also asking if his LIC policies make sense, because he is investing a significant amount in those.
See, now that you've invested in those, it makes sense to continue. If you had asked me prior to that, I would have said you need to think about it, because your returns, you've primarily invested for returns as far as I can see, and the returns will be fairly low. You could get much higher returns with other products. So, but it's a very good idea that you're thinking of a term cover and you're thinking of a health cover. I would suggest looking at your age and looking at the fact that you would require these covers into the future. Please look at both the private and the government sector options. Both have their advantages and disadvantages. Look at the health specialists, look at the general insurance companies, look at the government companies, both on the health and the term side. As far as term is concerned, you're saying you want a coverage up to 70 years. I would suggest take it for up to 65. Maybe that works better. But even if you need to 70, most of the term plans today are covering up to 70 to 75 years. And there's quite a range of them. So just to name a few companies, you've got HDFC, you've got ICICI, you've got Reliance, Aviva, Aegon Religare, Kotak, Birla, Tata. Some companies feel bad because I left out their name, but there are four more. So you should definitely look at all the options.
Right, Yashish, that's all the time that we have on this show of Policy Bazaar. But do write to us at ask.policybazaar.com or tweet us at Twitter at @PolicyBazaar_in, and we'll see you next time with another episode of Policy Bazaar. Goodbye.